Hello and welcome to Smaulgld. In case you missed the top gold, silver, and crypto stories for the weekend of March 4th, 2018. Goldman Sachs-backed entity buys crypto exchange Poliniex. Crypto regulation cries increase. Trump threatens tariffs. Petroyuan coming soon. Regulatory filings indicate banks identifying cryptos as a threat. Georgia lawmakers proposes that taxes can be paid in Bitcoin. The gold-silver ratio hovers around 80-1. These are some of the stories we're going to talk about, so let's get right to them. So gold closed at 1322 during the week. It was just down about 0.4%. Silver actually closed 16.50, which was basically unchanged. The gold-silver ratio ended at over 80.38 to 1. We're going to revisit this gold-silver ratio story that we keep hearing about consistently for the past 6-7 years, that there's sometimes or somehow this gold-silver ratio, that it's a historic ratio, it's 16-1, it's 9-1, it's destined to go there. Somehow the market doesn't understand this, and only the gold and silver pumpers understand this. And, well, here's just a quote. Peter Schiff wasn't talking about the gold-silver ratio, but he wrote something like, once the markets figure out what I know about the markets, gold's going to go ballistic. Well, sometimes the market is a very slow learner, and basically markets don't behave the way these pundits want them to behave, and then they claim somehow the markets got it wrong. Well, in the case of the gold-silver ratio, those advocating a 16-1 or predicting a 16-1 or a 9-1 ratio, the markets got it wrong for over 100 years. So either the market is stupid, or, well, the people who are predicting a lower gold-silver ratio, that somehow it's destined to go to 16-1, 9-1, well, maybe they've got it wrong. Well, let's take a look at a 100-year gold-silver ratio. There is no historic gold-silver ratio of 16-1 or 9-1. Indeed, if you look at the chart here, over the last 100 years, only for 2 or 3 brief shining moments did the gold-silver ratio even come close to 16-1. For the most part, the gold-silver ratio over the last 100 or so years has been well over 40-1, you can see right there. And in fact, the gold-silver ratio almost reached 100 in the 1940s and did quite touch 100 here, you can see, in the late 20th century. Now, one of the reasons that the gold-silver ratio wasn't higher from 1934 to 1971, you can see it went down here, was because the United States Congress, by an act of Congress, the Gold Act of 1934, set the gold price, fixed the gold price at $35 an ounce. Therefore, the gold price could not rise between 1934 and 1971, and therefore the gold-silver ratio couldn't rise. But even so, you can see with the artificial restraint on the gold price, the gold-silver ratio still did not go to 16-1. And that 16-1 number is based on supposed relative rarity of gold to silver in the crust. And now they're saying it's 9-1. But remember, relative rarity is not the sole determinant of price. All you have to do is look at the price of platinum. Platinum is 10 times rarer than gold, and platinum is not 10 times the price of gold. Also, the 16-1 historic ratio was never a market-driven ratio. It was set by political accommodation. In the 18th century, when they set up the bimetallic standards, it was because there were some people who wanted an inflationary metal like silver included in the metallic standard. They knew that inflationary metal would help poor farmers to inflate away their mortgage debts, whereas the people that were really interested in some money wanted gold. So silver was added to the mix, and they created a bimetallic. It's basically unwieldy to have a bimetallic standard, but they set the ratio at 16-1. That was not a market-driven value. Now, the price of silver can rise versus gold, and it has risen. For example, during the gold rush of 1849, 1850, 1851, a lot of gold was coming back east, which actually drove the price, made silver more valuable than gold for a very short period of time, because there was a lot of gold in the market. Now, when you have a manipulated market, sometimes supply and demand and the amounts of gold and silver are less important. However, keep in mind that the gold market is much larger than the silver market, and therefore gold and silver, while they're both equally subject to manipulation, silver is easier to manipulate because it's a smaller market. So people clamoring and saying and insisting that the gold-silver ratio doesn't make sense, look at the math and so on, I think they're talking a lot of nonsense, because for the last 100 years, when you had big manipulation since 1974, when they introduced the COMEX futures trading, the gold-silver ratio has been elevated. And before you had the COMEX, the gold-silver ratio was elevated, even when you had the gold price the gold price by law restrained at $35 an ounce. There's a reason silver is cheap. Silver is pocket change, has always been pocket change when it was money. Gold was never of the same thing. Now, the other people are saying, well, silver is so useful. It's the most important thing in our lives. Well, first of all, that could be said about any particular metal. Copper is very important in our lives. So is cobalt, lithium, zinc, tin, lead, and so on. Also, the thing about silver, and I'm not bashing silver, I'm just trying to explain. See, what people, if you hold a position and you insist that your position is correct and you refuse to look at reasons why perhaps your position isn't correct, well, you're doing yourself a disservice. So here's just something else. This isn't bashing silver. It's just that silver, they say, well, it's so important. It's used in so many things. You have to ask yourself, how much is needed in these things that it's so useful in? So, for example, in electronics, the amount of silver that is needed for electronics since 2010 has declined every year. Same with the amount that's required in solar panels. This is due to, not because they're making fewer electronics or fewer solar panels, it's because they figure out either to make the electronics smaller and you need less silver, or the solar panels are requiring less and less silver. They're even coming up with ways now to use nano silver particles instead of the silver paste. There's even a way to make solar panels with aluminum and not even using silver at all. So silver also can be substituted if the price gets too expensive by things like graphene. So when people start talking about silver so useful, or the silver to gold ratio, the gold silver ratio is too high, let's look at why. And I think I've given you some things to think about. And historically, we've seen the people that are pumping a story that the gold silver ratio has to come down to a historic ratio are wrong. There is no historic ratio here in the last 110 years. Yes, it's possible you might get one of these once in a generation moves where the gold silver ratio goes down to 16-1. It happened in 1918. It happened in 1966. It happened in 1981. Hasn't happened since. So I wouldn't hold my breath for that. And it's frustrating to see people insist that this is factual, that somehow the market doesn't understand silver. No, I think it does. It's had a long time to figure out silver, and it has not awarded it with a lower gold silver ratio. That doesn't mean it can't come down from 80 to 1. It just means don't count your chickens before they hatch and expect them to go down to this gold silver ratio to go down to 16 to 1 or down to 9 to 1. Let's get to the top story. By the way, we did Moronica this week. That's already up and live, so please go check that out. Now, too big to fail banks and Bitcoin. This is our top story. Goldman Sachs was an early investor in a company called Circle. Circle last week bought Poliniex, which is a large cryptocurrency exchange. This ties into my entire theory on while banks do not like competition, they don't like the idea of cryptocurrencies. However, they know that it makes more sense for them to get involved in cryptocurrencies and try to co-opt it, try to snipe at it while they can, but also try to profit from it. There's plenty of fees to be made from cryptocurrency exchanges. There's plenty of money to be made by bringing ICOs to market. There's plenty of money for lawyers, accountants, investment banks, and so on. Well, we've been hearing about the petroyuan for months. First, it was the story about it was going to be a gold-backed yuan. It was going to end dollar hegemony, game changer, game over for the dollar. Then when people realized that that was nonsense, when it was pointed out that it made no sense whatsoever for China to back its currency with gold when it's running a massive Ponzi scheme, credit-driven, restraining itself with gold made no sense. Then they said, well, they're going to offer the oil producers to convert their yuan on the Shanghai Gold Exchange. Wrong again. That can't happen. China doesn't want to, does not allow its gold to be exported. It wouldn't make any sense. They'd be out of gold in a couple of months if they actually made the yuan exchangeable into gold on the Shanghai Gold Exchange. That story was pumped for a while. Then the latest one was, well, the gold-backed yuan, not the gold-backed yuan, but the petro-yuan is going to challenge dollar hegemony because everyone's going to be using yuan to buy oil, and then they're going to take their yuan and they're going to convert it into gold, creating more gold demand, and then game changer gold 10,000. You can see how this nonsense goes on and on and on, and dollar hegemony. First of all, a lot of these gold pumpers don't, by the way, I like gold and I like silver. I just don't like the concept of making up these fantasies like gold silver ratio 9 to 1 or gold back yuan as some type of mechanism to make gold or silver seem more valuable than it is. Okay, now idea of the petrodollar backed by Saudi Arabian oil was very important in the 1970s. It's far less important for two reasons. First of all, the reason that people own dollars or central banks own dollars as reserves today is far less important for the purposes of buying oil. Oil is only 8 to 12% of global international trade. Central banks own dollars for a variety of reasons, including liquidity, and in the case of the Chinese, even manage their own currency. But also, Saudi Arabia is far less important today in the oil industry, in the oil economy, than it was in 1974. Today, the United States and Russia are the two top oil producers. It's not Saudi Arabia. The United States will be the top oil producer in the next year or so. And also, the United States is becoming a major oil exporter, including exports to China. Indeed, the United States is also a major exporter of natural gas to China. So if China is going to want oil, and other countries are going to want oil and natural gas, they're going to have dollars to pay for it. So I've been saying the new petrodollar for 4 years now will be backed by U.S. oil. Not that the dollar even needs a backing by oil, but if it needs to replace whatever, assuming it even goes away, the Saudi Arabia backing, the United States can easily back its dollar the same way that Saudi Arabia backed it by requiring foreign countries who buy oil and natural gas in the United States to use dollars. Also, about this idea that the yuan-denominated oil futures contract somehow becoming this big benchmark. Well, we're also seeing now that because of the massive amounts of U.S. oil production, that Texas shale now challenges North Sea crude as a world oil benchmark. Game changer indeed. All right, now let's get into the concept of these tariffs. The tariffs that Donald Trump is talking about. And I mentioned there's a turning point coming. And I actually think these tariffs play into the turning point that we've been talking about in Donald Trump's presidency. Unless they can nail him for obstruction of justice, something to do with the Mueller probe, Trump will become more and more popular. Now, that doesn't sound right because everything in the media here is against him. But remember, in my mind, the most important thing that people think of when they think of the president when it comes time to go to the voting booth and when it comes time to say whether they're in favor of what the president is doing is usually about the economy, and the economy appears to be improving. Now, Trump plans to institute 25% steel and 10% aluminum tariffs. Now, if you are a free market person like I am, or you are a Austrian School of Economics, tariffs are anathema to you. Now, I remember I was on X22 Report. I'll put a link in here to that interview. One of the things I said was at some point, if the stock market did fall, collapse, crash, whatever, Trump would stop taking credit for it and then start focusing on what he calls the real economy, which would be based on the progress that he had made or would be making on the economy. Now, these tariffs play right into it because if you do have tariffs, that's in a sense protectionism. And for example, if U.S. steel and other industries start to take off, people have jobs, higher paying jobs from them, they're not going to care if the stock market goes down so much. In fact, his political enemies, the quote global elite, are going to be more harmed. They're the ones who own companies like Tesla and the FANGs and so on. They're the ones that are going to be harmed. And his base, his voters, are going to be less harmed because they own fewer stocks and they're going to be more happy with the jobs that they have that he's creating either through tax cuts, infrastructure bills, or tariffs. Now, the infrastructure bill makes perfect sense because remember, he's going to build all this with U.S. steel. Well, it's going to make it harder for people to bring in steel from Canada. Now, in Moronica earlier today, you really want to check that out. I have a couple of clips of Justin Trudeau trying to explain what tariffs meant, the tariff situation that Trump wanted to impose on Canadian steel meant for his country. He actually, I don't think, understood it whatsoever. But now, what Trump is saying is that when a country is losing billions of dollars on trade with virtually every country it does business with, trade wars are good and easy to win. Now, people think, what a moron. Who could say that a trade war is good and easy to win? Well, Donald Trump said, and a lot of people underestimate Donald Trump all the time, just like with Ronald Reagan. They assume because he doesn't hold their progressive views on a lot of things that somehow he's an idiot. He doesn't understand strategy. Actually, I think he does. Now, Santiago Capital made a very astute observation here. He says, I wonder if the employees of U.S. steel companies like Trump more today than yesterday. rhetorical question. Last I remember, they're the ones who vote, not the leaders of the EU, Canada, or China. Those evil Russians apparently do. My response to that is nationalism beats globalism when the appeal is made to people's national interests or local interests, as there's more people with local national interests than global interests. When a leader says, our interests in Southeast Asia are at risk, you hear sometimes John McCain say stuff like that. The average American thinks to himself, I don't have any interest in Southeast Asia. So one of the ways that you win votes is by, this is exactly what China does. They appeal to their worker. The average worker doesn't care that China is printing yuan to do make-work projects as long as the people get the jobs from those make-work projects. They don't care that it's going to lead to a deficit. It's going to lead to a Ponzi scheme collapse. Similarly, the United States, we're no different than any worker anywhere else. You dangle in front of him a job, high-paying job, to build a road to nowhere, he's going to build the road. He doesn't care if eventually the road turns a profit, the bridge turns a profit, the dam actually generates electricity. They don't care. That is the easiest way to get people to vote for you, is by handing out either work or benefits. Now, the IMF is saying that this tariff plan is likely to damage the United States. I'm not so sure about that because, first of all, the tariff doesn't have to be in place forever. It's just a marker. But here's what Trump says. When a country taxes our products coming in at, say, 50%, and we tax the same product coming in our country at 0, well, that's not fair or smart. He's right. If you have a totally free economy, yes, then a tariff is anathema. It's the worst thing you can do. You're pissing in the pool. You're destroying the whole free market system. But that's not what you have here. You have countries across the board that are imposing tariffs, subsidizing products, and it's not a free market. So for the United States to try to play free market when the rest of the world is not, doesn't make any sense. Now, he also made the point that, and this is true, if you go to Europe, you'll find very few American cars on the road, most likely due to tariffs. You might find a Ford here and there in England with the right-hand steering wheel. But in the United States, there's tons of BMWs that drive you off the road, and Mercedes-Benz, all on the roads in the United States. Now, what he's saying is basically we can do a reciprocal tariff on your cars coming in. Now, remember, this isn't a static game. The tariffs, threats of tariffs, they won't stick. They're merely bargaining chips in the renegotiation of trade agreements. Now, the other thing that people haven't really mentioned is prior to 1913, before the institution of a federal income tax, the federal government was funded largely on tariffs. And tariffs, I say, this is for discussion, may be a better way of funding the United States government than issuing more U.S. treasuries. So instead of borrowing more from foreigners and having to pay them back and having to pay them back interest, tariffs make them pay up front. And this is exactly how we had the situation. Now, tariffs can be abused too. They can be used as a weapon, but they do have that element in that you just charge and you collect revenue from foreigners as the goods come in to the country. And that's how we funded our government. Now, there are issues with that. If the U.S. runs out of U.S. Treasury buyers, then the Fed steps in and they have to print dollars to buy U.S. Treasuries. Well, now you have inflation. So either in order to fund the government, you have to tax people, which means everybody has to pay taxes, or you can forego making income and then you wouldn't have to pay your income tax. That's not a very good option. Or you have to pay the inflation rate on everything you buy because the Fed has to print dollars in order to buy basically U.S. Treasury obligation in order to keep the government funding. Now, Michael Goyer here asks a very good question, but don't the U.S. consumers then end up paying the taxes? Absolutely they do. However, the people have a choice whether to buy those goods. So, for example, Mercedes-Benz comes in and now it has a 25% tariff on it. Well, now, boo-hoo, you can't buy a Mercedes for $75,000. You're going to have to pay $90,000 for it. Well, guess what? You don't buy it. So the difference there is with the income tax, you have no choice. You have to pay your income tax, and with the inflation, based on money printing, you have to pay. So now, what are your choices? You don't buy a Mercedes-Benz for $90,000 or a BMW for $90,000. You buy a U.S.-made car for maybe $60,000, $70,000. Now, that's just an example. This is for discussion purposes. I just like to say tariffs, while contrary to free market principles, may help curtail anti-free market activities like government subsidies, like they have in China, uneconomic make-work infrastructure and real estate projects, and overcapacity. So tariffs also obviate the need to issue debt to foreigners as they are a direct revenue source and you don't have to pay it back. So just something to think about. Now, just a place mark from last week, we talked about the Quad, the four-nation alliance, rising to counter China's Belt and Road Initiative. It was just repeated again in CNBC. And for a reminder, what the Chinese are doing, and Jason Barak of Wall Street for Main Street discussed this in a recent YouTube video, is that he views the Belt and Road as basically exporting China's debt Ponzi scheme and as a way of giving people work by making work outside their country, basically because they've overbuilt their own country and they haven't caught up to the need to use all the infrastructure that they've created. So now they need to go overseas to do the same thing. Now, what the United States and other nations are thinking of doing, the Quad, including India and Australia, are either helping China make some of these projects economical, or if there is an economic project that already exists, they can bid on it and actually harm China by undercutting the Chinese bid for it. So just keep an eye on that. The idea of the Belt and Road is being some type of way of China regaining or becoming the hegemon of the East. Not so sure about that. They've got their own domestic issues. And once you keep trying to extend the Ponzi scheme and you try to take it international, it's probably not the easiest thing to do. Now, what China's trying to do is they're trying to curtail their internal debt. They're trying to move to a services economy. And they're trying to, I guess, shift all this stuff outward, move towards making the yuan an international currency. Right now, it's only less than 2% of international transaction. They've got a lot of work ahead of themselves, so we'll see what happens. Let's see what else we got here during the week. Now, here, just so people understand, I don't understand this Chinese worship. I'm not for or against China. I try to objectively look at what they are. But objectively, what they are is they've basically elected this guy for life. He's now basically a dictator. They run their economy on a top-down, centrally planned communist model. Now, a lot of people that are gold bugs like to believe that they are also free market types, sound money types. Well, China's anything but that. That's what I don't understand why this, and I guess the only reason they go on and on about praising China is they think that somehow China's going to crush the dollar and dollar hegemony and their gold price is going to go up. It's not going to happen. Actually, the best thing that can happen for the price of gold, I think, is that the Chinese debt Ponzi scheme collapses under its own weight. But here's just another example. PBOC injects net 150 billion won in open market. China is fully interventionist. They're unapologetic about it. It's not like I'm pointing out something that they wouldn't admit. They do like to plan their economy. They do like to interfere with their economy. The United States does it too. However, the United States has some semblance of a free market. Gold back yuan, game changer. Now, China also has a huge pollution problem. A lot of their growth was based on not only issuing a lot of debt, but also not having any environmental standards. Well, now they're trying to cut back on debt and they're trying to cut back on pollution. What do you think is going to happen? Their GDP is going to go down. Their economy is going to slow. That's why they've got to go out to the Belt and Road and try to replicate that problem. Just remember the BRICS, they're the other big threat to dollar hegemony. Brazil, Russia, India, China, South Africa. Right off South Africa as having any influence on the world. They've got their own issues. They're running out of water in Cape Town. The rand is not worth the paper it's not printed on. India has got corruption problems. Brazil's got corruption problems, and here you can see Indian banks face crippling credit crunch as PNB scandal worsens. So don't think of the BRICS as somehow saving the world from dollar hegemony. These countries are basket cases at best, and at worst, some of them are actually murderous regimes. Here's just another point. Cobalt is so important. Here's a story. I mean, you can make the same argument about any natural resource. Apple rushes to seal cobalt deals as shortage fears deepen. Back to cryptocurrencies, Iran becomes the latest rogue state to develop its own cryptocurrencies. Here's my point about institutional money and cryptocurrencies. I just quick poll. If you regulate cryptocurrencies, that means institutions feel more comfortable investing in them. So does that mean higher or lower prices? Well, 88% said higher prices. And one of the primary reasons to own cryptocurrencies, you see, a lot of people keep saying that the only reason people own cryptocurrencies is because they have them for nefarious intent. They want to buy drugs. They want to do something illegal. They want to avoid taxes. That's not true. That may have been true when they first came out. But now I think the primary, my understanding, the primary reason people are investing in them is for speculation, not to commit crimes. And you see here, 78% is an investment, 22% commit crimes. That's still a large amount of people who believe. And these are people who probably don't own cryptocurrencies or hate cryptocurrencies. So they just want to say that everybody's involved in cryptocurrencies, like Bill Gates, are somehow complicit with murder or whatever. Now, let's see what else happened. Litecoin was the top performing currency in February. They think it's going to surpass Bcash this year. Now, Bitcoin, still people that are Bitcoin bulls saying it's going to double this year. Here's an interesting thing. On Gambler's Heaven. Now, this Bitcoin gambling site now accepts Bcash, Ethereum, Litecoin, and Doge. So you can gamble with your gambling currencies on this gambling site. Now, here you go. The New York Times saying Bitcoin is a waste of electricity or something worse. And the Bitcoin haters say it's something worse. Okay, what else we got? The regulation. Now, but we're seeing now Los Angeles real estate enters the age of Bitcoin. We're seeing Lamborghinis and high-end real estate being bought with Bitcoin. That makes sense. Now, Bitcoin apparently over the last couple of weeks has gotten cheaper and faster. And I think that's helping drive the price up. One of the cuts against Bitcoin was what uses it. It's slow. It's expensive. Well, with the adoption of Sedgwick and becoming Lightning networks, that'll probably be an issue. The past is just that Bitcoin Cash or Bcash served some purpose for the couple of months where Bitcoin was slowed down, but just by increasing the blocks in Bcash. But that seems not to be an issue anymore, so perhaps we'll see the increased use of Bitcoin and the decreased use in Bcash. Who knows? But here you go. $1 trillion money manager just joined the crypto frenzy. Now, most of your crypto investments by institutions have been limited to a few institutional products that they can buy, and they've also been specific crypto funds. This particular one, the Wellington Manager, is just like adding to its normal or its regular institutional funds, adding some crypto exposure. Here you got Georgia lawmakers propose tax amendment allow Bitcoin payments. We're seeing this across the board. The idea that they're going to ban it, arrest everyone, not true. What's happening, all the statements you're getting from the regulators is they want to go after bad actors. They want to make sure there's no money laundering. They want to make sure there's no tax evasion. But the two are not mutually exclusive. You can do that and also have a regulated Bitcoin, Litecoin, crypto exchange. Now, South Vietnam or wherever this is, Bangkok, Thailand doesn't think so. So they're going to do some banning. Here, all the ways regulators plan to tame Bitcoin. If you read this, none of them involve a ban. Here, Bitcoin futures regulator CFTC clears its own employees to trade crypto coins. Again, not a ban. Israeli Supreme Court prohibits bank from restricting crypto activity in landmark decisions. So again, even if the banks want to say, we don't want Bitcoin, we don't want Litecoin, we're going to stop dealing with it. Here in Israel, not here in Israel, but in Israel and here in this story, they're saying can't do that. And here is a former FDIC chair saying regulators need to deal with but not ban Bitcoin. She says, quote, we don't ban assets, which is true. Interestingly, also, when they talk about Bitcoin, they like to label it an asset or a commodity, and it's not a currency. And that gives them a neat little way of saying it's not competition to the dollar because it's not a currency. We don't ban assets, she says here. Big news here, Germany won't tax cryptocurrencies to make purchases. Now, that's a huge deal. And actually, it's kind of genius because if you sell your Bitcoin, you have to pay tax on it. But if you want to spend it on stuff, you won't have to pay tax on it. Well, that's going to increase. That's a Keynesian dream. You don't save anything. You make $3 million in Bitcoin and you just blow it on Lamborghinis and houses and wherever else you want to buy, Starbucks, coffee, whatever it is, and you avoid your taxes, but you generate revenue, and the people who are selling all those goods, they're going to have to pay the taxes. Now, Carney says, now, a lot of people interpret he's the Bank of England guy, that somehow he's against cryptocurrencies. He is and he isn't. He's basically saying we need to regulate them and not ban cryptocurrencies like they're doing in China. Just another example of how central banks, regulators are viewing cryptocurrencies. They're viewing them with suspicion. They're viewing them as a threat, but they're not looking at the threat and saying, we're just going to nail this. So again, ban it too. Bank of England's Carney calls for regulation to end crypto anarchy. Here's one. Kuroda shocks market hinting at end of QE. Well, we'll see what happens. You know, Japan has had a lost 2.5 decades. At some point, they need to stop and let the market take over, but we'll see what they've done. They've done all stimulus. 24/7 for the last 30 years or so. Low interest rates, negative rates, Bank of Japan buying all the bonds. Basically, I think China is going to be in the same position as Japan. They brought all that demand forward. They did it far faster and far more than Japan ever did. And Japan is going to go into a huge slowdown because they're not going to. They have to catch up to their consumption. And I'm telling you, these tariffs by Trump, if they're actually geared at China, that could really slow China down. And it'll also slow the U.S. down and cause massive inflation in the United States because the United States gets a lot of cheap products from China. But it could really damage China longer term on a structural basis because it needs the United States business while it tries to figure out how to transition its economy. And if it gets cut off because of tariffs, they've got a bigger problem than a temporary inflation problem in the United States. But here's Carney saying a very important point here. This guy's no dope. He says the best of cryptocurrencies will gravitate towards the best of exchange. I say read that into regulated exchange like Poliniex behind with Goldman Sachs banking. If they are regulated, others will fall by the wayside. See his regulate, integrate, co-opt tone. He's against them, but he's not saying we're going to smash them. We're not going to ban them. We're going to tame them. Just like when you have a wild animal, you don't just go out shooting them. If you can tame the beast, you have an animal on your side. A horse you can ride, dog you can have. All right. Cryptocurrencies point the way in many respects to the future of money. Again, Carney, he knows that there's a lot of innovation that can go on here. The banks can benefit from this innovation. If you ban it, it stops. Because banks aren't going to carry on with the innovation. They're going to piggyback off of the private sector innovation. The people that are into cryptocurrencies who have a profit motive to come up with new innovative ways of integrating cryptocurrencies into either the cryptocurrency ecosystem or indeed the banking system. Gold and silver. Well, India, I reported, they had 4 times the amount of gold imported into India than even Russia's massive record gold reserve addition. So gold demand, physical gold demand outside the United States, very, very strong in India, China, Russia, all over the world, other than at the U.S. Mint. I'm not even going to go through the U.S. Mint numbers. I think the United States Mint sold just 5,000 1-ounce American gold eagles in February and about 2,000 or 3,000 American gold buffaloes. So the gold demand in the United States is basically flat, 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 down, down, down. But gold demand around the world is very high. Texas Endowment to review $1 billion gold position. Now that's interesting, says the new CEO. This was, I think, with Heyman Capital. They look like they have a different investment company advising them because the guy, Kyle Bass, had purchased a lot of this gold for the Texas University, and he took delivery of it, but it looks like they're looking maybe to sell it. Who knows? We'll see. Some interesting stories here about found gold, Confederate gold, silver. You can check these out on the website. Here's a Bitcoin pump story. I love this. Change the world. They're always going to change the world. Bitcoiners are just as bad as the gold pumpers. It's not that. The only difference between the Bitcoin pumpers and the gold pumpers is the Bitcoin pumpers actually can take some bragging rights because they've been pumping Bitcoin since it was $3. And then it went to $80 and $100, then $1,000 and $20,000. So they may be full of it, going on and on about this and that and changing the world, but the price has skyrocketed. Whereas the gold and silver pumpers have been saying the same nonsense for years and the price goes nowhere. I call that gold derangement syndrome or silver derangement syndrome. There you go. We talked about this earlier. Keith Neumeyer doubles down on triple-digit silver call. Here he is on Kitco. He was on Silver Doctor talking about the gold-silver ratio going to 9-to-1. And that about does it for the week. Thank you very much for listening. And please remember to subscribe to the Smaulgld channel on BitChute, on YouTube. Also become a Smaulgld patron. I do appreciate those contributions on a regular basis. Or consider donating to Smaulgld via PayPal, Bitcoin, or Litecoin. Thank you very much.